It's Valentine's Day, so what better company to analyze than Match Group, which provides dating products worldwide, and its most successful product is Tinder. But they actually own 15 brands of dating apps and platforms. So, can such dating apps be the future of building relationships with other people? If so, then this business can grow very fast and be really profitable. But let's try to keep our emotions and feelings out of it and just look at some numbers to analyze and value this company. The company was owned by IAC, an American holding company, until July 2020, when Match Group was spun off as a separate public company. So if you were to invest $1,000 into this company at its IPO, you could buy around 10 shares, and now they would be worth something close to $377. Ouch, that is a loss of 62.3% in 3.5 years. Not the best start, but a drop in price can sometimes create an investment opportunity. And to find out if that is the case, we have to look at the company itself, and not only the price tag. Individual insiders, that is an X, 0.5% of the company is owned by individual insiders, and we would like to see this number over 2%. So the management does not have its skin in the game. And are individual insiders buying? That is a check. They bought over 35,000 shares in the last year and sold just over 11,000 shares in the same time. So it seems that insiders believe that this company is worth more than it is valued at by the stock market. And do super investors own this company? That is a check. 2 super investors own the shares of this company, and they are Bill Miller and Lee Ainsley. And are they buying right now? That is an X. In the last quarter, Lee Ainsley sold over 610,000 shares, and that is a reduction of 96.9% of his investment. Well, some mixed information here, so let's look at the fundamentals. Return on invested capital, that is an X at 7.8% median returns. And we want to see this number higher than 10%. So the return is not bad, but below what we are usually looking for. And what do we know about net profit margin? It is a check at 15.4%, and it is really impressive when we compare it with margins of their main competitors. Grindr has a net profit margin of minus 2.3%. Bumble has a net profit margin of minus 12.1%, and Spark Networks margins are at minus 34.4%. So if we look at the biggest players, only Match Group is making a profit currently. And now let's take a look at share buyback. It is an X. Since the IPO, they issued extra 9.1% of shares. So unfortunately, they are diluting investors. And the debt? It is also an X. It would take them almost 5 years to pay the long-term debt with a current free cash flow. And we want to see it under 2 years. So that is a lot of debt. That is a red flag. Revenue growth, that is an X at 1.3% compound annual growth rate. And we would like to see this number higher than 10%. So the revenue is growing rather slowly. And what about free cash flow growth? That is an X at 4.6% growth. So a bit better, but still surprisingly low. And earnings per share growth, that is also an X at 4.6%. I have to say that it is surprising. Before I looked at the data, I believed that they may not be very profitable, but that they are growing, and it is actually the other way around. They are making a profit, but growth is slow. Match Group is not paying any dividends at the moment, and looking at their financial health, they are really not in a position to do so. Price to earnings ratio is 21.3, so rather high, but nothing crazy compared to the current market conditions. So let's make an educated guess about the growth of Match Group for the next 10 years, and thanks to that, using a discounted cash flow formula, we will calculate its intrinsic value. So in the low scenario, we will estimate a growth of 3% for the first 5 years and then 2%. In the medium, 5% and then 4%, and in the high scenario, 6% and then 5% growth. So the low scenario is close to the expected average online dating market growth, which is 2.6% for the next few years. Medium is predicting that the company will continue to grow at the same rate it did for the last few years, and the high one is predicting that the growth will actually be a bit bigger than in the past, but not by much. So, with such estimates, the intrinsic value in the low scenario is $25, in the medium $31, and in the high scenario $34. But we have to always apply a margin of safety to those prices. I use a 30% one, and with such a margin we get in the low scenario $18, in the medium $22, and in the high one $24. And the current price is around $37, so it is all in the red. If I were to compare this analysis to a first date, I would have to say I am not impressed, starting with the debt. If they were debt-free, the valuation would change completely, and I would say that this company is fairly valued. But it is not the case, because when we buy a part of Match Group, we also get our share of a massive debt. They have a market cap of $10.2 billion and a debt of almost $4 billion. Unfortunately, that is not the only problem. Financial health is not perfect, and growth is disappointing, to say the least. Well, I guess I will have to swipe left in this case. But we should not give up in our search for a perfect investment. You actually may want to see a much more appealing investment opportunity by watching my analysis of Alta Beauty. Thank you so much for watching, and see you in the next one.